we like to call Mortgage DNA, Dwayne and Andrew. We could call it Andrew and Dwayne. It doesn't, vice versa. When you're ball headed like this, it just does not matter. Hey, weekly podcast, we're just bringing you information. There's so much going on out there that we want to take this opportunity to share with you. Hey, right here in the middle of the week, kind of give you an idea of exactly what's going on. So, Andrew talked about, and this week, new home sales will come out. Last week, existing home sales came out, and
Yeah.
I always look. Let's make sure we tell folks existing home sales. It may be a new home to you, but what that means is somebody lived in it before. Okay, somebody peed in that toilet. Okay, or walked on that carpet. Right.
Right.
Whereas a new home sale, it's new construction. Nobody's lived in that home before. So last week we had existing home sales come out, and look, was down 6% year over year. And I think one of the things we talk about all the time, and I know I try to share with my audience, and I see when you're talking with your realtors and your clients doing your stuff online, um, home prices aren't going to fall without inventory. It's supply and demand, right,
Right.
Andrew? And are
Absolutely.
you seeing that in your market up in Northeast Ohio? I mean, is that kind of what you're seeing as
Yeah.
well?
I mean, I think you're seeing that anywhere, right? I mean, there is a
Yeah,
lack of homes. There's
yeah.
a supply shortage. So there's not going to be a decrease in pricing anytime soon.
Yeah, and I think when you look at it, a million units, right? It sounds like a whole bunch of existing homes, but when you take what's under contract, now you're down to about 500,000 homes. That's it across. That's not in Cleveland market. That's not in the New Orleans market.
That's
That's
coast
in
to
the
coast.
whole United States of America.
Yeah.
So that is not much, and that gives you an idea. That's even counting the homes that or trash that nobody wants that's probably been sitting on the market forever, right? So
Right.
I think we'd both agree existing home sales is the key. Existing home sales is the key to kind of making the economy go. So now where do you go from there, right? The people, you got to get those people engaged that have the 3%. You got to get them to hammer that for sale sign in their
Right.
yard. And where's that going to come from? Don't know. But I think as we start to look at this right now with a 3.3 month supply, it's not there. The one I guess silver lining I would say is that it is up 4% over last year. So at least, hey, heading into this spring buying season,
Right direction.
we're heading in the
Yeah.
right direction, right? But existing home sales is going to be a big thing. Volume wise, Andrew, what are you seeing as far as purchase and refinance volume in regards to loan applications? How's that looking on your end?
I mean, it's heavily purchased, right? I mean,
Yeah,
very few. There are some cases where I do have a couple people interested in a refi, but again, we talked about this in the past. It's if they're doing that, it's debt, it's divorce,
yeah,
it's
yeah.
relocation,
Reload,
right?
yeah,
Yeah.
yeah.
But the key is this. Let's go back to the new home sale or the home sales.
Existing home sales, yeah,
The existing. The thing is that if it, regardless of the rate, you're sitting on a lot of equity. So it's the cheat code for the next home you're going to buy. You're going to be able to put down a lot more money than you did initially.
yeah,
And that's going to really bring down how much your payments are going to be able to be. Right. So, you know, that needs everyone's saying like, well, when the rates get into fives and people are going to list. Well, if there's not a lot of competition and there's a home that you like and you can sell your home and put that much money down, your payment's not going to be too far off
yeah,
from where you probably envision it in your head of where you would like it to be. Right.
yeah. And I think with my clients and with my audience on Mortgage Gumbo, we're still treating everything, even though the rates dipped a little bit,
Yeah.
we're still treating everything as you're not going to have the rate that we're giving you today. If it's in the sixes, you're not going to have this for 30 years.
No.
Because if I call you next year at this time and tell you the rates are in the fives, or there's an opportunity maybe to buy some discount, get it to a high fours,
Yeah.
you're probably going to take that call, right? But don't you want to be refinancing when your neighbor is purchasing, when that house next door to you is going for, you know, 10, 15, 20% higher than what you bought it?
Sure.
That is my thought process on this, right?
Well,
I
look,
think that's the biggest thing people have to sort of understand. And even those, like you said, that are homeowners right now, just kind of keep that in place, in
right.
mind.
Dwayne, even when rates were in the fours, in the threes, let's say not that, in the fours and the fives, people were refinancing or moving every 7.5 years.
Yeah.
It was like literally changing jobs, changing homes, right?
Yeah.
Like it was like a coat, like a jacket. You're just constantly putting a new one on.
Yeah.
So regardless of what the rates are at, people do get sick of their home. They get sick of their neighbors. They want something bigger. You're outgrowing it. So eventually, very few people, I guess my point is, will keep a loan for 30 years or 20 years. It doesn't happen. There's always going to be a circumstance to have to sell or move or refi. And that's always the cheapest money that anyone's ever going to be able to get is a mortgage.
Yeah, no doubt about it. And I think at the end of the day, too, refinances, I think as people are going to start in the next week or so getting those bills from Christmas, right, from Santa. And, and we're going to talk about retail sales in a second. And again, why I've been telling my audience, and I'm interested to get your opinion on why I don't think the Fed's going to cut rates. People are going to start getting those bills. And what I'm seeing on my end is refinance volume is picking up as well, just simply because I think people are learning, you can't wear that 2.5, that 4% interest rate like a badge of honor. You can't take that to the grocery store and go, here, look at my rate. Can I buy that bread?
Can I buy that? Yeah.
And inflation is real, and people are starting to understand it's real, regardless of political. Everything costs more. So I think when you look at that, we're going to see normally in January is always slow for refinance, right? Everybody's busy making their New Year's resolutions and all that stuff. And then usually when the Christmas and the Santa Claus bills start coming in is when people go, holy smoke, I got to start dialing some things in here.
Right.
Let's talk about that, Andrew. Retail sales came out last week, and the dude's undefeated, and that dude is Santa Claus. Him and Father Time never lose, right?
They never lose. Yeah.
Never lose. And retail sales were expected to be up 0.2%, and they were up 0.8. That's 4 times.
4 times.
So my question to everybody watching here is everything that much better for you? Or are we using our credit cards maybe a little bit irresponsibly, right? I mean, that is sort of my thing. And when it comes to retail sales and seeing these type of things, at the end of the day, data does not lie, right? And Andrew, I do not see the Fed cutting rates in March. What's your thoughts and your opinion?
I don't think they will. I don't think they will do it. But let's say just keep it a pause again. Hell, we had a little bit of a dip in the rates, and they didn't touch the rate. You know what I mean? Like it's kind of, I think the Feds are allowing the economy to self-correct itself, right? And like that will do a lot. So when we see some less favorable data coming out, unfortunately, that's what everybody wants. We need that pain. Rates come down, and I think you're going to start seeing more of that data. That's not going to be as good. The retail sales are over. The employers, like the part-time people that were working for retail, like that's all going to. So the employment, everything's going to come back, not so rosy, for February and for January.
Yeah. I mean, jobless claims. And I always tell people, November and December jobless claims always look good because somebody needs to wrap presents. Somebody's got to dress up as Santa. Somebody's got to take pictures, be an elf, right? And all that fun stuff.
Right.
So, I look at it there. But here's the thing, too. And for those who are listening, always go look at your 10-year treasury and go look at what that is. And add 1.75 to that. That is where mortgage bonds usually should be operating in a normal market. And right now, we're about 1% higher. So like you're saying, Andrew, we don't even need the Fed to be cutting rates for us to start seeing some opportunity. And we talk about this all the time. The federal funds rate has nothing to do with mortgage rates. We follow inflation. So that's why we've seen it kind of go hand in hand. But that's what kind of excites me. Now, I get it. Investors, people with bonds, they're kind of buying things right now and holding on to their profits because it's been a tough go the last 18 months.
Yeah.
But I think you're going to start seeing everybody go, hey, you know what? I need to start making some more loans. Let's start giving some of this back to our clients. And I think as you see, because today the 10 years at 4.1 or something like that. Well, you add 1.75 to that. That's 5.8. We're not at 5.8.
No.
Right? We're at 6.7, 6.8, something like that. So what should be exciting you is the fact that you've got a whole percent there that we really don't need the Fed to do anything. And that can start shrinking.
That can start coming.
That's reason for encouragement there.
Right. You know, I get asked this a lot, and everyone's like, why isn't the ARM so more appealing, right? Why is that? And I have some theories about that, but I also tell them you got to look at the 2-year and the 5-year ARM, treasury bills as well, because there's an inverted curve and all that.
Yeah.
Basically, the banks and the Feds, they don't want these ARMs at the moment. Everybody knows it's all short term. It's really short term, and it's just like, get this fixed. They're going to refinance. I mean, hell, some banks aren't even doing mortgages at this time. They don't have the large depositories don't have the backing or the wherewithal to do that. Or they just don't want to. So there go us, right?
And I think that's where we are going to benefit as, being our own lender, using our own money.
Yeah.
Those folks want our loans after we close them. So I think that's why when we talk about that 1% margin, eventually those folks are going to start going, hey, we want that opportunity.
Yes.
Right? Because especially more so, Andrew, let's face it, if you're a business owner, you've got much more opportunity to sell something to someone else when they're at a 6.5% rate versus 3%.
Sure.
Right? I mean,
right, absolutely.
So, when you're getting your 1098 in the mail right now and you got a 3% rate and your interest for the whole year was $2,200 versus, $8-9 grand, that bank's not making a whole bunch. There's not a lot of room for error there, right?
No.
So that's why I think you're going to see as these depositories, they don't want to lend. They're scared to lend because they don't know what they're so fixed right now.
Their margins are too tight.
You all this money for 3-month and 6-month CDs, Andrew. They're trying to just get an inflow of money so they can maybe have something down the road.
Down the road, right?
Right?
Absolutely.
Because they don't have it right now. They're scared. They don't know. That's not their strength. And I think that's why right now more than ever, whether you're a realtor or you're somebody considering doing a loan, you need to be working with a lender that this is all they do.
Right.
You don't walk in one day and you see Sue is greeting you. The next day she's taking your deposit, and then you come in and you want to buy a mortgage, and then you're seeing Sue at the mortgage desk, right?
And realistically, how many years do you think a loan officer at a bank has an experience?
No, I mean, dude, minimal.
2,
And they're stuck with whatever
1?
that product. Whatever that product is.
Right.
So, the other thing with us is let us shop. Don't go having your credit pulled by 5-10 different people.
Right.
We've got 30 plus investors here. Come to us. We can look at that for you and let you know what your options are and present them to you. Right? People are big, and our rates are cheaper than what you're going to get at your brick and mortar local bank.
When people call me up and ask me, like, what is your rate? They ask that because they don't really know anything else. Right? Like, it's a natural thing. What I always need to explain is that's an important question, but the 2 questions you should be asking is A, what are your turn times? And B, how long have you been doing this, right? How long have you been in the business? You've been in it longer than I have, I think. When did you get in the business?
30 years.
Yeah.
Yeah, 30 years. Yeah.
I've been in it since 98, been with the company. Actually, January 5th, I celebrated 20 years.
I saw that.
Yeah. Congratulations. 20 years in this company. Great. So I think that's the most important thing as far as the experience and knowing, okay, these guys have been through a couple of these rodeos. They've seen these ups and some downs, and they're going to be able to navigate. And I think that's a key, that and the turn times.
Yeah, well, and we're picking up loans here, and you, I'm sure, are locally as well, where they were working with someone, and that lender didn't renew their license.
Yeah, they're gone.
Out of business.
They're gone.
And in December, they're gone. And now I get them, and you're up against a hard date, and you're trying to salvage something that some lender who was getting out of the business maybe misinformed them, so the information's not
Right.
right. That's why, more than anything, you got to get pre-approved. People always go, what's the first step? Look, yeah, credit, all that, that's great. But you got to go to you got to get a true pre-approval. That's the only way you're going to compete in today's market. We've already told you there's 500,000 houses nationally. So if you want that house, my goal, Andrew's goal, our goal is to make sure that you win. We don't want you disappointed. We want you to win. That's why we do the true pre-approval.
So look, speaking about winning, something that I started to, and I've emulated this from you, it's I have a guarantee, and I don't do it all the time, but I do it in certain circumstances with people. And you call it the golden ticket, which I love because Willy Wonka was pretty cool, or Charlie Chocolate Factory, whatever the hell it was. That was pretty cool. And I started to do it here, and I have a guarantee if I get them pre-underwritten, right, that I would put up so much of my own money if it doesn't close on time. But you are, in my opinion, like one of the OGs on this. So you want us to tell us about your golden ticket?
Yeah. So at the end of the day, we take home ownership pretty easy, pretty seriously, and we understand that buying a home can be stressful, but the process doesn't have to be. So our goal and my goal is to make sure if you're truly serious about purchasing a home, and then get with us, let us get you a true pre-approval, which we call the fast track. I call it a golden ticket. But what that means on your end with us, what we're able to do is we're able to get it in front of an underwriter and have an investor sign off saying for the next 120 days, we guarantee this loan. And that makes you able to go out, make those offers, right? You can get those offers, put those offers in. We can close a lot quicker. And then what we're seeing, Andrew, is my clients are winning even if they don't have the best offer, because that listing agent's calling me going, what the heck is this guarantee that you're giving that will close on time? And I then tell them, and they like, we're in. And guess what? Then that listing agent starts sending their buyers over. So get a true pre-approval. A true pre-approval is not you calling on a Saturday going, what's your rates? I'm going out looking at a house. You're going to lose, or you're going to be, chances are you may be disappointed and not win in that environment. You want to get a nice fast track guarantee for us that lets people know here's the golden ticket. They're guaranteed to close on time, or we're going to pay your seller, not the listing agent. We're going to give your seller money and we guarantee it. It's a win-win for everybody.
That's putting your money where your mouth is.
Absolutely. Absolutely. And we believe in our clients. And more importantly, this is proof that we have the backing and the investors and the money to be able to do the things that we want. So, hey, good show. Appreciate it, man. You got anything else, buddy?
Hey.
I know y'all having ice storms up there. See, we had to close school for, schools down here for cold weather. Y'all closing them for whiteouts, ice storms, all that.
When I was in school, there would be a tornado, and you would put a book over your head and go in the hallway. Nowadays,
in the hallway.
There's a lot of school being called off too much. But hey,
just shut it down.
Whatever.
Just shut it down. Absolutely, it's crazy. So, and then we're expecting rain for the next 8 days down here. So who knows? So we shall see with this warm up we got. 3 days ago we were 16 degrees, which down here that's like Antarctica, and today we're going to hit 70.
Wow.
So
good for you.
Expect some sinuses, some illness, all that stuff coming. So all right, hey, this has been Mortgage DNA. We're here every single Wednesday at 10 a.m. You can find us on all our social media sites. Hey, reach out to us. We're easy to find. And hey, till next week, we'll chat with you then. Thank you.
Have a good